So thank you everybody for making the time to come, and thanks to all my panelists as well for being here. Shachindra, we were a little worried that you'll be late, but you beat the traffic and came on time. So perfect timing as always. So I think, I've got a great panel. My colleagues have done a good job of pulling all elements of it together. We've obviously got SBI, which is everything in banking, I guess, in India, and on non-banking as well. We've got a great, if I can call it a local bank for lack of a little better word. And then we've got my ex-employer, HSBC, who I spent 10 years at, and with lots of, as I say, money to spend in India. So that's a great perspective. And of course, Shachindra and I go back a long way. We've drunk water from the same ghats in Banaras. So Shachindra is from BHU. I did the IIT over there. And Shachindra obviously runs a very successful and emerging and ever-changing NBFC. So it'll be good to get views from all my four panelists. So I think, and I've got a set of things to talk about, but depending on the time, we can have some questions and we can cover off some other stuff. My intention, as I was telling a couple of my panelists, was to cover some of the bigger things which are happening in the sector, not get into some of the issues we'll hope to cover later, lack of deposits, CD ratio, bulk rates, and maybe lack of NPAs and things like that, stress in MSME. Maybe we won't talk about that. We'll talk about the bigger issues, and then if we have time, we'll come back to some of the other things. So, Mr. Goel obviously covered a lot of stuff. He speaks extensively well and covered a lot of things, and maybe we'll touch upon that as we go as well. So maybe coming to the set of things I wanted to cover, we do this every year. I've been in DNB for a bit, 5-6 years. We do the BFSI summit regularly on an annual basis, and we have various themes. So this year, we have 3 themes which we are hoping to cover. One is what we hope to talk today now, which is driving transformation in the future-ready BFSI, which Mr. Goel also covered, and then inclusive finance, which is the panel after this. And then we got new capital pathways, private credit, and things like that, which Paritosh kind of touched upon in some of the chats we were having earlier. So we can, we'll start on the bigger stuff and then we'll drill down. So maybe let me begin in no particular order, and I'll appreciate, all of us will contribute as we go through, and I'll come back to each one of you if there are things which I believe, need further attention or discussion as well. So in terms of, I think Mr. Goel just said, if you want to be a $30 trillion economy, we've got to be $45 trillion in size, and he rattled off a lot of ratios in terms of where we need to be. If all of us are on the same boat, that, we need to get to this size, obviously this sector drives that change, drives that growth. From where you sit, what do you see some of the bolder things which will need to be done to get to that 45 trillion asset size? What really does the sector need to do? Maybe I'll start with you, and maybe wearing double hat for insurance and maybe for SBI broadly as well, where you spend a lot of time. Maybe if I'll start with you, maybe you can outline what runs through. And Mr. Jha has very kindly come today. He's off to Guwahati, where on Friday, I think they do, the SBI management, Mr. Sethi and everybody does the presentation to the board on strategy going forward. So maybe it's opportune time to ask you, what are you putting in that deck?
Thank you, Avinash. Thank you for calling me. As far as what Mr. Goel has said, I think very correct that if we are looking at a Viksit Bharat GDP of 30 trillion by 2047, the BFI sector has to contribute with 45 trillion kind of thing. And the growth rate, what is it, 15% credit growth has to be there. But if you look at the kind of growth in each and every sector it is showing, and the potential of this country, which is being seen by everybody across the globe, we are having the, now also we are the fastest growing economy with the huge scope. We are ready to change. We are ready to go for the new things. We have seen the AI summit recently, when we have gone out of way to call everybody, and we are taking those technology well ahead of our time, and we are thinking that we should be ahead to tech. We should invite people all across world for the thing. I think huge growth opportunity. The sunrise sector, which again Mr. Goel has said, and SBI came with SBI Chakra. We look at the sectors which are growing. We have to focus on future-ready sectors. We have to look at the future-ready manpower across the banking and BFSI sector. We have to use the future-ready technology so that we can reach there. I don't think the dream of Viksit Bharat or the dream of 45 trillion by banking sector is 100% reality, and each and every bank, private and public, we are working on it in a very sincere manner, in honest manner, and we are making huge strides towards that goal.
So AI, technology, manpower, I think all themes we'll pick on. On insurance specifically, sir, maybe I can come back to you after we're done, and maybe you can touch a little bit on insurance as well. Paritosh?
Thank you for inviting me on this panel. Viksit Bharat is fine, but let's start with the basic. The banking model, and I'm talking about the larger financial services model on the lending side, banks and BFCs, and on the other products, which is insurance, mutual funds, etc. I think the landscape has been changing substantially, and all of us have to wake up to the new norm. Traditionally, banks used to borrow money cheap, lend money to a segment which was giving wider margins. We used to operate with a very thick margin, and we were able to process applications over a long period of time, take whatever time we want to take, because borrowers didn't have an option to go to anyone else to raise money. So we were in a monopolistic situation, and it was, we were building costs basis what kind of incomes we were generating. So it was more of a cost plus model. Now, come today, we are in a situation where, as a bank, we are highly regulated entity. Where do we invest our money? Who do we lend? A large part of the balance sheet is driven by what the regulator wants us to do or what the government wants us to do, which leaves us very limited flexibility on who we can lend and what we can do. On the other hand, there is a competition on the customer side. A corporate or an individual can go to an NBFC, which is relatively less regulated, to a mutual fund, to an insurance company, to a every other alternate form of capital provider who doesn't have the same regulatory costs as a bank has, which means the return that we are getting is shrinking. On the other hand, the deposit that we were mobilizing, that also is changing. The larger part of deposit used to be a passive money which used to sit. People used to rely on the banks. The money used to come in and used to sit, and we used to lend that money. Now people have become more active investors. While the money remains in the system, it changes hands. From an individual depositor, it moves to a wholesale depositor. Between 2020 and 2025, the incremental deposit mobilization, which used to be close to 79% from individuals and NR, which has come down to 54%. So it is wholesaleization of deposit. And a wholesaleization of deposit means lesser money available for lending, because there is a subtle provision called LCR, which means 100 rupee raised from a financial institution actually cannot be used for lending. On the contrary, banks have to put out CRR on top of that. A money raised from a corporate, only 60 rupees can be used for lending. A money raised from an individual, maybe 98 can be used for lending. So there are some of these. So banks have to worry about, and the cost of deposit is rising. You said that we will probably not talk about it, but that's the, so the margins are shrinking. Now in this situation, if we have to support the growing economy, which banking is a very integral part, what we really need to do is we need to wake up to today's reality. We cannot work at the cost to income ratios at which we have comfortably been working all along. And what's the solution? That's where productivity, technology, AI, and all of these good things come. I think as a banking system, and give and take plus minus a few percentages between 38 to 45, 47% is most of the banking system, and NBFCs, their cost to income ratios are. We effectively are like utilities, public sector utilities. We used to have power sector utilities, cost plus return of 16% on equity that you generate. I mean, those models don't survive. We need to be competitive. We need to invest heavily on data. We need to improve productivity. We need to reduce cost to serve. RBI is also putting a lot of pressure on, over last 10, 12 years, RBI's focus has changed. They used to be earlier between 2013 to 2017, 18, focusing a lot more on resolution of NPAs and cleaning balance sheet. Thereafter, their focus moved to governance on the banks. And now for last year and a half, their focus has moved to customer experience and customer service. Now, all of that with reducing cost, if a bank uses technology today, the cost will rise. So we need to really work on using data, AI, everything available at our disposal to ensure we serve customer faster, give them a better experience. Today, for a customer, no experience is the best experience. They should not feel any experience while dealing with it. It should be just a matter of, it should be a flow. So as banks, we have to invest in all of these things to ensure we remain competitive in the market and we can serve the customers and also industry.
No, great, Paritosh. I think that was in many ways a masterclass on many issues which the industry faces. You touched upon cost income, you touched upon data, and obviously overarching technology. So thank you for that. From your perspective, it'll be great to hear. I think you also cover off a little bit of the neighboring countries in terms of what you do. It'll be good to see what maybe you have thoughts about India and some of them.
Thanks. I think you started by talking about big shifts in banking, and that sort of makes me zoom out a little bit from the today and perhaps take a 20-year view, the Viksit Bharat view, which Goelji rightly talked about. So, I mean, when we zoom out a little bit more, we look at HSBC and our own history. We are 160 years so in the country. So 20 years forward, we need to look 20 years backward. We need to see the journey where we have come from, where our neighboring countries have shown what they have done in the last 2 decades, China being a prime example. And the reason I compare that is because India has now reached the per capita GDP that China was at around 2 decades back, after which you saw a supernormal growth. So I'll probably zoom into 3 big shift themes that we as HSBC at least believe that India genuinely has a good chance for. The first is a truly globalized India. I think that is globalization is something we talk about quite casually. We have a lot of multinationals, we have Indian companies going abroad. We talk about quite casually, but that is very different to what globalization truly means when you look at, let's say, Singapore, when you look at London, when you look at New York, when you look at Dubai, right? So that is one secular theme that we think these FTAs will just turbocharge. Every single day, HSBC sees an inquiry about an M&A. Every single day. At least a few. Both inbound and outbound. Whether partnerships, whether JVs, whether new setups, whether manufacturing, whether services. These are cross-border M&A only I'm talking about. That is the hunger already in the Indian ecosystem, and it's not just the big corporates, it's the mid-market companies. The startups want to go multi-market. Foreign companies want to come in. So globalization will mean globalization of companies. It will also mean globalization of banking assets. We already see Gift City at crossing $100 billion of banking assets, right? This is in roughly last 4 or 5 years since IFSCA really came into being. And that tells you that's a sort of proxy of what a global banking asset pool looks like. You will have a global deposit pool as well. Look at offshore Chinese wealth. That is a proxy of what offshore Indian wealth will look like. And you would look at Indian banks, foreign banks running both onshore, offshore balance sheets. So when we look at leverage also, Goelji rightly talked about asset pool and the banking asset pool which is required to support. That doesn't need to be a rupee pool. In the Viksit Bharat of tomorrow, Indians will borrow in dollars. If the interest rate is lower, why should I borrow in rupees? ECBs already allow us to do that. ECBs have been more complex, difficult to access for SMEs, for MMEs, but Gift City makes it possible. We've seen our book explode over time. So I think globalization is one big shift that we as bankers, we as service providers need to prepare for. The second big theme, I think, is wealth creation. I'll just give some context to that. Dubai, in my role, I look after Middle East as well. And Dubai is right now attracting the biggest amount of inbound millionaires as migrants. Across the world, when we look at migration trends, Dubai is attracting the largest number. So that number is around $10,000 millionaires every year. I'm talking 2025 statistics. It was around 10,000. Compared to that, India creates $100,000 millionaires every year. 10x of what Dubai is getting as inbound migration. This is the scale of wealth creation in India, domestically. 100K, $1 lakh millionaires. So we will, 2025 numbers haven't yet come out. We are expecting it to touch $1 million millionaires.
And that includes primary home.
Yes.
That includes primary home in that dollar, 1 million?
Exactly.
Mm-hmm.
So that is the scale of wealth creation. I talked about the $3,000 per capita income. If you look at purchasing power parity, that's already around 3x, right? So $12,000 per capita income. So if you look at rural consumption today, already, rural consumption and leverage is exceeding urban consumption and leverage. It's a very interesting statistic, right? It is not rural stress, mind you. Because if there was rural stress and because of which assets and leverage was going up, then consumption would have gone down, right? Consumption is going up while leveraging is going up in rural India, in semi-urban India, relative to urban India. In urban India, if you look at the statistic, the consumption is to savings and investment is going up, which means urban India has already crossed into that zone where the savings and investment pool is going into things like SIP as we see. So the second big theme I sincerely believe is going to be wealth creation, and HSBC believes in that, showing our hard line on the paper. So we said 20 new cities is where we would like to be. We are already there in 14 cities, and we got a landmark approval from RBI, which allows us to now be in 34 cities. And this will cater to the wealth, this will cater to the corporate in those cities. It will be just one branch per city. Because in the new normal, we believe banking is not a sum total of branches. It is the value that you bring to that city. So this is the second theme. I think the third theme, which India will really benefit from and will leverage at scale, in our opinion, is data and being the factory for data for the world. If you look at this budget announcement of 2 decades of tax holiday for cloud providers, at least in my working career, I have not seen any particular sector getting such a tax break. That is path breaking. You already saw last week, Google announced a $15 billion setup in Vizag. Why Vizag? Vizag is the east coast of India. Guess where the data cables for India currently come to? Maharashtra. Where do those data cables pass by? The Gulf, amongst the most geopolitically sensitive areas. We need data cables connecting to Singapore, into Australia, into Japan, and onwards into United States and through the Pacific. That's why the East Coast is so important. So the big techs are already starting to see that Viksit Bharat and investing in that Viksit Bharat of the future, where India will genuinely stand a chance of housing the data of the world. to create the AI, to run the AI for the world. Yes, engineers and smart tech people will be there across, whether it is in Americas, whether it is in Iceland, whether it is in Norway, Sweden, Israel, lots of tech startups. I met a quantum startup out of France who's made quantum into a API plug. But India will be the back office. India will definitely, which we have already done in the ITA space. We have so many GCCs coming in. But we will evolve from that call center to where we are today, which is software development and research, to the back office of AI. I just wanted to share these three big themes, in our view at least.
Super. No, so I think new things on wealth, new things on the data bit in terms of, the importance obviously and the location and the importance of it going forward. So thanks for that. We'll come back to that. Very, very bullish as always. So I guess that's good. Shachindra, the big bad world of MSME.
Yeah,
What's the bold news there?
I was just thinking, a banker painting a little grim picture for private sector banks, HSBC giving worldwide view. Our domain is very, very small, right? We look at it with a very narrow lens of small business financing, because that's what we dedicate ourselves. That's where we have, in 3 years, we have built a very sizable scaled organization. But I think so the biggest, at least in the credit market, I continue to believe, and I've held that view for last 10 years or so, that one of the largest shift would happen wherein the credit would now accelerate for small business in our our economy, and that's a big bold move. I think so. It is still not happening at a pace where it should happen. One, I think so. I have always held this view. There are three core reasons for that. One, the political structure of our country. We are, in last decade or so, have been in a high degree of religious polarization, which has led to formation of government, and that the shelf life of that is very limited, and the people in power knows that, and that's why they have been moving to economic polarization. Now, political polarization to economic polarization is currently linked only to employment. लोगों को आप हाथ में नौकरी और पैसा देंगे, then they will vote you back. And the majority of that will come only from small businesses. Because in a country like India, you cannot have industrialization happening at a scale. That can only happen in pocket. And that's why from a political economy perspective, MSME is the most important segment of the market. And I think so within the lending institution, we have to realize that any time, for any sector, when the governments and the policymaker are behind something, that tend to prosper. And that's why we are behind it, and we believe that it would continue to do well. At no point of time in any form of crisis, government would let small businesses go down and be in serious trouble, because ultimately it impacts the employment. So that's, I think so, is a big idea, big shift. We have been working on that. Second, I think so, one of the core challenge or the problem of the lending industry, that it is heavily, as Paritosh rightly said, it has been on a cost plus model, and nobody has really worked to really dig through looking at how can you do credit purely basis cash flow, because we are all hung on collateral. But the data infrastructure now allows you to be a cash flow lender. We have not succeeded yet, actually. We have tried our level best. But all the architecture, the kind of people, and biggest deterrent is our own lenders, who look at our portfolios with a lens, they look at their own balance sheet. But eventually, you will see that the data infrastructure, the public good utility, which we call the tripod of the account aggregation, GST, the digitization of banking, and now embedded finance and all of that would explode the credit for the MSME. And third is the use of human versus AI. Generally, I think so in India, the power of the AI is still not fully understood. I'll give you this example. So earlier, when I had to come for any kind of a panel, there are 2-3 back-end people, good smart analysts, which will prepare some set of document and give me inputs what to speak, because we are not intelligent enough. So that's why you have to always rely on others. But I don't do it anymore, right? So I left my place at 9:40, and when I reached over here, all the input what I have to speak came from my mobile phone. not from any analyst. And it is very, very sharp and steep. Obviously, we have been very advanced in terms of machine learning with respect to create credit score. We have invested very heavily. We are too small an entity to invest very heavily. Biggest problem of investing into any form of technology that the upfront cost of that is so humongous and the payouts are much longer periods. So obviously, there is a challenge of how do you manage between current and future. But the fact is, yesterday we ran an experiment. I told my chief risk officer to use my Claude account, upload around 2,000 of physical garbage PD, which all of our credit officer in our micro lab business do. Take the initial bureau data and take the scrub of today and come back with a revised thing, what we have done wrong, what we have done right, and revise a new PD sheet for that. It took almost 13 minutes to analyze 3,000 plus garbage PD sheets, around 10,000 plus customers bureau scrub, and by every account, almost 43% of the accounts were considered not to be given loan at the point of origination itself. And it created around, because we use personal account, not an enterprise account of Claude, but it gave around 17 or 18 new PD templates. This is our own data. Theoretically, so what is required is the learning to use this and implement this. But you will, I think so all of the big shift is that lenders and credit market has to now learn the art of not investing in human capital of physical, head counts, but intelligent human capital which can use this. Because those who would be able to do it would just simply surpass, the rest of the world. So I think so these three things, one big shift purely from an Indian perspective, beside everything other noise, I continue to believe that the growth of MSME market would surpass what we have seen for consumer credit market and personal loan over next decade or so, and I have no doubt about it. Second is that human behavioral, investment would move to, technological investment, and people have in their own resources has to make the art of that. And third is that the talent pool has to shift from, if I may say so, labor intensive work to intelligent intensive work. And that would differentiate between two different type of lenders.
So again, all great thoughts there, Shachindra, and maybe in interest of time, we are all very bullish people. My next question was going to be talk about what could go wrong, but maybe we'll come back to that later. So I'll jump right into the second theme, which I wanted you guys to share your views, which is, the whole bit all of us have touched upon, which is AI. And, the cost of it, the investments needed, first of all, the returns on thing, how do you finance the investments as well, which is what the world's grappling with right now. And we were chatting this morning, I think JP Morgan had its investor day, I think on Monday, in the snowstorm in New York. They had a dial-in call, and Mr. Jamie Dimon has said that, JP Morgan will spend $2 billion a week. JP Morgan's non-interest expense is going to be this year more than $100 billion. And that's the amount of investment which JP Morgan can do because they make $52 billion net profit. And when you look at even the US landscape of the big banks, Bank of America is something like, $75 billion. Citibank is at 55 and Wells Fargo is around that. So the amount of scale of investment needed and the returns needed, and I think even Jamie Dimon said that I'll do 100 things, 75 will come right, 25 will go wrong. And maybe at that scale you can do that, but in our own scale we can't take those views. And what you touched upon, Shachindra, in terms of what the market's taking a view, in every sector we are getting beaten up. So we are a data company, data analytics company. We are not listed, so we don't have a market price. But last week, the entire data space got bounced around a lot, where somebody like an S&P, who's really the big daddy in the industry, down 15% one day, and a Gartner down 40%. And, how do you kind of talk to your shareholders? How do you get incremental capital is a real challenge. And in the DNB space, we've been around, you've been around 160 years, so DNB's been around 180 years. So I guess all of us have history and some knowledge. And DNB has this thing of the DUNS number, which is the unique identifier we use for every entity. And we've got 630 million of these globally. And we believe we are in a kind of safe spot because we have this proprietary data on top of the public data. We can do all the other flow data which you talked about and give a better view. But obviously the market has a different view. So it's a real challenge for all of us. So maybe, Shachindra, you kind of talked about one relevant thing which you did yesterday in terms of AI. Maybe if it's useful for the audience, I'll touch upon, would you just kind of talk about, maybe each of you, in terms of AI, what are you doing in HSBC relevance in India, and where do you see that kind of going in the near future? Maybe I'll start with you.
Thanks. I think AI is one area where one needs to take a step back. There's a problem of plenty, frankly, when you look at so much of AI tools around you, when you get so much of ideas. It's one of the good problems to solve, especially when I put myself in a strategy hat. So I try and apply only two lenses. One is and very traditional banking lenses. One is of trust, and two is of focus. What I mean by trust is that, we talked about Claude, and there are many other tools which are there, and there is a common perception, and AI is growing, as we know. So there is always this thing that is it hallucinating or not, and who does the regulator expect the client to trust? It is HSBC. It is your brand in first. So 100% of HSBC tools are human in front. That's point one. The human again has to trust the output. So I can't tell my relationship manager that, okay, hang on, my AI tool was fantastic. It analyzed the client's global trade view, it analyzed every supply chain and told you this is the working capital solution for your client. The AI did that in, let's say, 1 minute. If I ask my RM to validate that AI and put his signature and his job on the line, it is unfair because my RM will take 1 year to do that analysis. So I need my technologists to give a product offering to my frontline, which my frontline can trust. And when they talk to their customers, the customers can trust the frontline. So that's why I'm applying the lens of trust, because again, when a customer talks to us as a bank, the word bank, by the way, means trust, right? I bank on you means I trust on you. That's how fundamental trust is to HSBC. We don't, by the way, offer the best rates. We don't offer the best products. We still bank half of the multinationals in the country. So I think the offering that we have plays to our strength, but plays to the trust that customers place in us. The second thing I said is focus. So focus also means prioritization. What you really want to spend your time on. Otherwise, you could end up with 1,000 use cases. So you asked me the question of what we are doing in India. So last week at the AI Summit, we released 3 of our use cases in the public domain, which are all, again, human in front. So first theme was around responsible AI. So we've launched trade forensics, which can go into connected parties patterns, circular trading patterns, multi-country routing patterns, and identify export imports which are different behind the intent of the company as per their articles and their trading working capital, which identify connected individuals, connected companies, shell companies, and so on. So complete trade forensics as the largest trade bank in the world and in India. We handle more than 10% of the trade of India and most other countries. The second one, again, on the responsible front is on foreign exchange management. So FEMA constitutes our Bible as bankers, as authorized dealers. A piece of regulation which is sacrosanct to a bank like HSBC, which is bringing foreign exchange to the country and outbound. And our frontline, our clients need to have the right advisory. So this is an AI which understands FEMA. You could give an M&A transaction, you could give a trade transaction, you could give a complex royalty payment, dividend payment transaction, and the AI can say, in that situation, what does FEMA advise you? So this is a powerful enabler to our relationship bankers to actually interpret the FEMA. we have a physical human FEMA team who were inundated. I mean, I was talking earlier about the number of inquiries we are getting. We are inundated. We can't just increase the capacity of our central FEMA hub. So these are a couple of AI use cases in the responsible AI front that we released last week, and one was on customer satisfaction that I think everybody's doing in terms of customer journey analytics and so on.
No, thank you for that. Maybe you can share that AI tool with the regulator as well on the FEMA side. Make things faster.
They love it.
In Kotak, you have a lot of stuff going on. Companion, you got platforms, you got Coder.
Yeah.
Some things you want to share?
So we have a full, very senior management team. Our AI person who is driving AI adoption in the bank is senior management personnel of that level responsibility. Couple of things which I'll talk about is, see, for us, what we need to achieve is the customer gets the best service, best advice at the fastest time, and delivered at in a manner that brings pleasure. So we have, what we have done, we have large number of 2,000 plus branches. A lot of customers keep coming to branches, and people on the counter needs to answer multiple kind of queries, whether it is from deposits, maturity, interest rate, calculation, any regulations, remittance to different countries, all of those plus trade transactions, as Ranjan talked about. So we have created a repository of all circulars, all information, all processes. Any employee can get into the AI dashboard and put the questions, and every question kind of creates or refines the data sets that we have already fed in. So over the period, we have realized the utilization of that tool has been increasing, which is improving the customer experience, and the accuracy of the response from the tool has been substantially improving. So that's a big shift, and we are seeing significant improvement of penetration of that data and improvement in customer experience. Second, we have started using what he talked about, Coder, is basically use our own agents to write codes, and we need to really do it responsibly. And I think the experience has been phenomenal. The amount of time it takes to get engineers to write codes versus the coder writing codes, and then we need few engineers to validate them. You guys would have seen, I think yesterday or day before yesterday, IBM stock fell by $30 billion because one post said that the Claude can now read COBOL.
Right.
So IBM has a massive consulting business where large part of revenue comes out of consulting, because most of the ATMs use COBOL as a language, and the engineers who used to write in COBOL and you could modify, they don't exist anymore, they're extinct. So only IBM can do all of it. They used to have a massive consulting practice. Now, Claude can now read COBOL and detect any challenges or correct any, and to make it suitable to today's requirement. And that alone led to massive correction, because it probably would take away a large part of business of IBM. Now that's the risk that we are taking. So everything that we do, we need to really see how can we make ourselves future proof. I just gave you two examples. We have close to 90 such pods working in the firm on making AI use our operations more efficient and making it easier for example, if an RM is going to a customer, there is a tool which will give them complete data, what's the information, if there are any pending documents to be collected, it'll have on there. If there are some commitments given to credit committee, last time when the credit note was prepared, he will have that. These are the questions. So some of these things are very easy. Another thing, we see massive attrition in the banking and financial services industry. Today, a relationship manager would not know what is the history of the customer with the firm for last 10 years. The CRM tool captures every detail of the customer interaction by various RMs, and AI will summarize, we are still working on it, and give it to the RM that what has been the interaction of the bank with the customer over last 10 years. some of these things will help the customer as well as the bank.
No, of course. I mean, institutional knowledge in banking is phenomenal. So, yeah. So, I think thanks for saying from a SBI perspective, maybe from an insurance perspective, you touched upon climate risk a little bit in the earlier when we were chatting. Do you see anything from your side on a AI bit you want to add or generally?
First, whatever banks are doing or mutual fund or other thing, they are basically wealth creators for the country. Insurance, especially non-life insurance, is a protector of wealth. And for protecting your wealth, if you look at the potential right now, the insurance sector, non-life insurance per capita premium is $25 in India compared to 555 US dollar across globally. In US it is more than $3,000. If you look at Indonesia, it is more than $45. So huge scope is there in insurance industry. Right now, the total premium 3 lakh crore plus is more than around 1% of the GDP, which has a potential to reach to minimum 3 to 4% going for that. And as far as AI is concerned, when we are looking at the growth thing, as I say, the being be the protector, you have to make sure that AI used when you are developing any kind of product. What kind of product you need, hyper personalization, what is needed, like today world, the kind of climate change is happening, the cyber threat happening. We came out with a parametric insurance product, which is unique. It has nothing to do with what eventually some event will happen, but there is chances event that has been protected by parametric insurance. The cyber threat, we are taking care of the how we can protect the industry as also the individuals, because today's the biggest scare in our mind is whether my money is safe in banks or whether something will happen. So those kind of products we have to prepare using AI. Claims, another very important part of the insurance industry. AI is used and being used in a big way to find out the damages to the motors, the claims which is submitted by the for health claims, by the OCR and using technology, making it very clear, not using the manual and making sure that whatever claim document it is read by the AI and then we do the claim settlement there. When we are doing underwriting, earlier days of historical underwriting is a gone way. Now every day the new changes, new risks are coming. So using the dynamic model, your underwriting is also using a lot of AI related thing. How you are making sure that the data what you are having is being best used to provide the best kind of product, best kind of underwriting, best kind of claims, and also the customer service when it comes to agentic AI, which we can using in the contact centers, or when we are looking at the chatbots, which we are using at our website. I think huge uses of AI is there, which is making sure that we should protect our country, property, people in a better way.
Yeah, so lots of things going on, but long way to go. Maybe I'm a terrible moderator, so obviously we run out of time. But one thing I really would like, the views of the panel, and at the end of the day, and Shachindra touched upon, labor. He said working from labor to smarter. I don't know what the exact word he used, but we are all people at the end of the day, and this is going to impact. And growth is all good, but all this technology is also going to impact all of us. And the frightening thing is that as an engineer also, I thought, the impact will be more on the blue collar side. Maybe the initial impacts are going to be worse on the white collar side, which is what is playing out right now. So, it's an interesting world. I mean, if you talk to people in the West, they talk openly about a 4-day week, that AI will be so good that we'll have a 4-day week and you'll have time. And this M&A which you touched upon, I mean, there have been large deals in the entertainment gaming space. People are buying businesses because people believe we'll have more time and we'll spend money gaming, and the young guys specifically who don't save, which you talked about, Paritosh, and universal income. So these are frightening things, honestly, to me. I mean, I was last week in London, and palpable fare in friends who work in wealth management industry. You talked about wealth, so it's an interesting one. So one is kind of what's going to happen, and then what do you do with the folks you have in your shop. How do you get them up to speed? How do you get them onto the same kind of platform, knowing that there is all this chaos around you? Maybe Shachindra, because you touched upon it very quickly, we are out of time, and we'll see if we can take some questions if there are any questions. But sir, please.
Yeah. So I think very quickly, in interest of time, I'll give you two examples. One, last 7 years, we implemented an ML platform, which is in a score model, which used to say yes and no at the onboarding of a customer with respect to, whether customer is, possible to give loan or no. Biggest challenge we face, the credit officers believe in the score which came out of a machine learning platform was very, very low, right? And finally, we have to give up and make not that as a primer, but as a secondary support platform. Second example is we implemented in, a tool which is for, we have physical 300 branches, 300 credit managers, 1,500 salespeople. A tool which records the conversation and do a PD analysis, pulling the data, and then say and yes and no. It became such a big failure because credit officer, when they used to go, they used to record only 1 minute of conversation and rest of the PD they used to do physically, because they said this is not something which we want to use it. So this is the biggest challenge, irrespective of the kind of technology, because the human embedded trust and understanding of their own skill set is so high that we have now realized first you have to create trust among your own people, and over a period of time change them to trust data and technology more than their own judgment. That's a massive shift of a journey, right? I gave you example of our CRO. So it starts from a 25,000 rupees salesperson to right up to the our highest level of hierarchy, saying machine can do a better job than all of us, right? And that is where we are seeing. So for example, we are launching a prompting session for top 100 people of company. It's only a training how to write a prompt on an AI tool. This is as simple as this. And over a period of time to take. So I think so in the next 3 years, this shift of churning the talent or moving the talent to trust technology is the biggest challenge, and which we have to make that journey from now on.
Difficult one.
I'll probably conclude with just one thought, which is very similar to what our mutual fund sector tell us, that past performance is not an indicator of future performance. So the human differentiator that I see from AI is the path not traveled. Humans can go in a tangent to do things that were not done earlier. Somebody goes from Europe and discovers India. Somebody goes and discovers America. I mean, from that time to now, our government goes and says, we'll give you a 2-day decade of tax holiday on cloud. Dekhte hain kya hota hai, right? AI fundamentally predicts the future based on the past. It is clinical. It looks at piles of data. It assumes that the past will replicate the future, which actually I believe is a serious risk if we blindly rely on AI, because as we know, the past is not the same. So if we look at India itself, we talked about rural income and rural expenditure patterns. It is completely defined logic. If you looked at the thrifty India who used to save every extra rupee, now you have an ambitious India who is willing to spend and leverage on that. So if AI were to be told that, what does the future look like, and if it only relied on the past, then that would be a challenge. But again, AI is adopting. AI can look at replicable models elsewhere, apply that. So how we do prompt engineering is important. So I'll just conclude with that one part, that past is not the future. When we use AI, we have to put that lens, especially in this country, which is not a developed country, which is not a flatline country, right? We are a growing country where the new normal is being set every year.
Great. Paritosh?
Your question was on what happens to the human capital. I'll give you 2 points of view. One is more official answer. See, all of us as good leaders, one thing we should follow. We should not do what someone else can do. That's delegation. So if you can delegate something to a machine, you must do it. Okay? We will worry about what that person will do. So coming to what that person will do, see, there has to be a time when all of us should be able to enjoy art, music, literature, culture, food. So let AI, let machines do the work. We should sit back and enjoy. Let's not worry about all of that just now.
Yeah, no, that'll be the utopian world for sure. Mr. Jha? Especially, I mean, you employ a lot of people in India, SBI,
I
and I
can
guess
say
there's
that, again, coming to human capital, you can delegate work, but you cannot delegate responsibility. So even if you are enjoying our time, the even AI does the work. We have to be very clear that what are the logics, what are the intelligence, what have fed to AI, whether it is correct, whether it is dynamic, whether it is changing. We need to change that. If we are just, I think, delegating the responsibility, that should not be good. That we have to take care.
great. So maybe we are out of time. I'm sorry that, I didn't cover all the bits which I also wanted to do, but, the flow was very good. I think there were a lot of thoughts from my panelists, so I didn't want to interrupt any of them. So thank you so much, guys. That was, I learned a lot as well, and I'm sure you guys did. So thank you so much for all the candor and the openness in sharing. And, a good coffee is always a good thing to have. So we should enjoy that, and amongst other things. So I don't know who's after me. Do we have time for one question, or does anybody have a question? You have a question, sir?
One for Mr. Kashyap. You're talking about shrinking NIM and competition for business in the banking sector. See, we have a dichotomy. On the one hand, we talk about competition where for the same cake, different institutions are fighting out. And on the other hand, there is a big lot of players who are underbanked and who don't enjoy credit. How do we, overcome this dichotomy? How do we cover this gap? Yeah, second one is for Mr. Ranjan Bhattacharya. You talked about, borrowing through gift city or overseas lending. What's the best hedging strategy in the current extremely serious geopolitical scenario? Hedging.
Okay, let me attempt to answer your first question. I think that's so you talked about there is a competition and shrinking of margin on the overbanked category and there is the underbanked category. Now, I think as banks, which is, as Kotak, we have our 811 platform, which is for the core India. So we have core India as a segment, which is mass India, where we provide digital banking ability, facility to people who can log into the bank and create a bank account in a couple of minutes time. And thereafter they need to do KYC and make it full banking. Now, that segment, why it was not being, why bankers were not able to reach out to them? One, because they didn't have access to the branch network. Now, because of the technology, they don't need a branch network. The branch is in their hands, in their pocket, on the mobile. So that's one. And they have ability to open bank account, whether it is YONO or whether it is 811 or any other format, they can do it. Second, ability of data to take credit decisions. Now, because of the data availability, we are in a better position to take credit calls and provide financing to them. I think the increasing data availability and awareness will obviously help improving the banking penetration into that segment.
Thank you.
And which obviously will provide better margin, which is what everyone is going after, the lending in microfinance or unsecured lending and all of that. That's
I think
सर कुछ हमारे लिए भी छोड़ दीजिए अगर ये अंडरसर्व मार्केट भी सब बैंक करने लग जाएंगे तो हम तो खत्म हो जाएंगे तो थोड़ा तो कुछ तो हमारे लिए भी रहना चाहिए
Okay, quickly on global hedging strategies in an increased geopolitical world, I think you're very right. If you look at the dollar, it's been depreciating versus again, if you look at the rupee, it's further depreciating versus the dollar. Again, if you look at currencies like the pound sterling, it's appreciating versus the dollar. So if your child is thinking of going to London for studies, you're in for a shock because 25% appreciation has happened, right? So it's an interesting question for both importers and exporters and in an increasingly globalized Indian world. So our advice would be to strongly use the new relaxations that the RBI has provided, which allows you to have rupee accounts offshore. That's one opportunity which the regulator has given, but frankly, nobody is really using it. So you can look to do that, because increasingly with a globalized rupee view, you would have counterparties who also have rupee exposure. So I think that's the internationalization of the rupee theme which the government and RBI want to promote, and we are strongly supportive of that. We've seen currencies like the renminbi, for example, globalize very rapidly. Sing dollar is another example. Euro is a fantastic example. A currency which got created in our lifetimes, at least in front of us, many of you in the room. Many of us would have been skeptical that how the EU will even create one currency out of so many countries. Look at what they have done. We as one country are larger than the continent of Europe if you look at the number of people, if I look at many other parameters. So why can't rupee be like that? Okay, in the Viksit Bharat of tomorrow. The second is, in the more near term, if you have foreign currency exposures, both, let's say you're importing in one currency, you're exporting in one currency, don't do it via rupee. Don't convert it back. So you can maintain multiple multi-currency accounts offshore in Gift City. You can keep them and keep converting them, which will simplify your foreign exchange, which will simplify your exposures to reduce the number of currencies in your basket to the minimum currencies that you actually transact with.
Thank you.
Thank you.
Great. I think I'll close it here, guys. So just in its time, you have a question, sir? Go ahead, quickly. Introduce yourself as well, please.
Yeah. My name is Tushar. I am Chief Financial Officer and Company Secretary of Rama Group. It's a private 500 crore company. Okay, my question is, we have been last week we had a AI conference in Delhi and all. So my question is whether the scope of AI is a hype. And second question is, Mr. Bhattacharya talked about Vishakhapatnam center and all. So do we have that much scope, do you think, in AI?
Thank you.
So, hyper reality, I think that question is settled. It is a new normal. I think we have to just take that in our stride and then use it, to that human capital question and so on. And I think we should play to the strength. And generally speaking, yesterday we were with the UK delegation as well as a Luxembourg delegation. One thing that everybody coming from outside to India says is that India's optimism about AI and embracing AI far surpasses the common man in most of Western world who are skeptical or afraid of AI. That is a great attribute of the human skill set. Also, I said that because we take problems head on, whether it was COVID, whether it is AI. I think the risk of AI will be on one side, but the opportunity of AI is on the other side. So I think your second question alludes is whether India has the bandwidth to deliver that. I think it's a great point. Whether our colleges are creating that kind of skill set, I think it's starting to, is what we are seeing. Second, in terms of the hardware and the energy sector, land the governments are giving. What we see from the states, they are literally offering land at 75% discounted and so on to attract businesses. The second is stable power. Electricity is something India over the last decade has become narrowly surplus. It's a great position to be. Many of us have grown in a lifetime where, electricity blackouts would be a normal. People would know that this hour to this hour light jayega. Okay, so thankfully we are in a era where that is not there. But mind you, data and AI guzzles power. The sum total of Bitcoin is equivalent to the power of whole of Australia or whole of Singapore or Switzerland. We ran some simulations. For example, if UPI were to go on to Bitcoin, digital ledger technology, it would suck the entire power of a state. Okay, so AI is like that, and Beijing was power shortfall for many, many years. Beijing, the capital of China. A few years back, 2-3 years back, they realized that this huge amount of Bitcoin mining which is going on around Beijing. They just came out with one regulation banning Bitcoin mining. Overnight, Beijing became power surplus. So power is an important ingredient to your rightful question. India will have to generate those gigawatts to supply that piece. And the final is the tech stack, which I think the big companies will bring in, whether it's the hardware, whether it's the know-how. I think that people will definitely bring in.
Yeah, please, of course.
Just 30 seconds on your first question, or hype or not. So last week during the AI summit, there was a front page advertisement wherein Mr. Modi shaking hands with Sundar Pichai. Now, they read it in this manner that there is a representative of a state with 4 trillion GDP shaking hand with a corporation with 4 trillion market cap. They are deciding to come to India because of the large data set in terms of population as sitting in India. I think there is no hype. This is reality, and how we use it is up to us.
So maybe we'll end it on that positive note. Thank you again, everybody, and thank you guys for hearing into us as well. So over to you.